Welcome to Crypto College. Basic rules of trading. So, this is going to be a very brief video, and I will cover some of the basic points that I get asked from the total beginners. The people that just started trading, do not have any knowledge about trading, never traded in the past. So, if you're an experienced trader, you can skip this lesson. The most questions that I get asked is basically about trading. Number one, how does it function? Where does the money come from? Some people think that trading creates wealth. Well, maybe for one person, but not in general. No, it does not. I would say probably wealth changes hands, goes from one person to another. And then they want to know what is the role of exchanges. So I'm going to cover these points. So without further ado, let's get into the lesson. Let's see. As always, disclaimer, legal disclaimer. Please read this. Take a moment to pause and read this. And just would like to remind you that cryptocurrency trading is a risky business. You can lose your money, not just your profit, but your total capital. You have to be very careful. You make sure you do not risk your emergency funds, your family funds that you've got to save, your rent or mortgage coming up, or any emergency payments that you have coming up in a short, in a short term. Do not use that money. Okay, so when you start trading, you're basically doing two things. You're looking for a long or looking for a short. As you understand, long is usually when the prices are going up. Short is betting against the market, so when prices are going down. Those are the two positions that usually traders take up in futures trading. And what happened in the process, what happens here is, let's say you're trading with $10. So you have to understand something. There are always going to be losers and winners. This is how trading is structured. So it's not exclusive to crypto trading. It's all sorts of trading. Forex, S&P, commodities. There is a winner and a loser when it comes to trading. So this should just tell you that trading is not easy, especially as a beginner. When you come into this world of trading, there are those that are very experienced. There are those that are called institutional investors, aggressive investors. They're very experienced. They know all the tricks and trades of trading. And you're new, you enter this field, so the odds are stacked against you. Unless you prepare yourself, you do the analysis, you understand, what trading is all about. You go through the course, you're going to learn a ton of stuff about how to become disciplined, how to be focused in trading. Winning is not easy. And you're going to hear me say this throughout the video. It's not that I'm trying to be, a pessimistic person, but I'm just trying to get you ready for trading. I want you to be smart. I want you to understand that you've embarked on a difficult task, yet very rewarding. A couple hours a day of trading, if you know what you're doing, can do wonders to your finances, can bring all sorts of freedom. So, like I said earlier, there is a winner and a loser. So let me explain this to you. Let's say you're trading $10 and you take a long position, and the trade goes your way, the prices move up, and you win that $10. You win your position. There is someone on the other side. On the flip side, there is someone that lost that $10. That person took a short and it didn't work out. Prices not go down, prices went up. So you won that $10. And the money is traded through the exchange. It's funneled through the exchange. I don't want to. when I use the word funnel, it's not in a negative connotation. It goes through the exchange. So, exchange, they take commission out of every trade you do, every trade that you do. Now, some exchanges give you a break if you're using limit order or market order. We're going to get into the details in future videos that you're going to see. But in this one, I'm going to keep it very brief to the point. So, exchanges take money out of your trades. That's how they survive, that's how they make money. And when you win, someone loses. When you lose, someone has won, right? That's how it is. That's what trading is all about. And there will be a time where, you know, you're going to get frustrated because I can guarantee you 100% that you're going to have losses. You're not going to have 100% losses 100% of the time. No, that's not what I'm saying. What I'm saying is, I'm guaranteeing it 100% that you will have some losses. That's what I'm saying. And if you do things right, you're going to limit those losses. You're going to learn risk management. You're going to learn how to be disciplined, and you will limit those losses, right? But if you don't follow all that, you will go belly up very quick. Whatever money that you come into trading with, you're going to lose. You're going to keep losing, and you're going to give up. This is why 90% of the people fail in trading. Some people say it's 95 or 99%. They fail in trading and they give up really quick after that because they just run out of money. The way we teach you trading is you don't use your capital at the beginning when you're learning. You trade with very small amount of money, real money, not paper money, real money, because that's what makes you learn psychologically, right? When you play with real money. But you learn, you get to the point where you understand everything about trading. This is when you start putting in your heavy bags. That's not smart at the beginning. So, yes, you're going to lose trades. That is going to happen. And someone on the other side is going to win those trades. So, what's needed? Careful evaluation. When you're trading, you need to understand the analytical and fundamental analysis. You need to, before when you see a coin going up, first of all, you don't jump on a candle. Just because a candle is going up, you don't jump on it. You wait for the reset. So you have to, when you start looking, you have to spend 10, 20, 30 minutes looking at a coin, looking at the behavior, studying the chart, seeing what's going to happen before you even jump on. I mean, I usually take about an hour and a half. You will read the weekly, you'll study the weekly, time frame, you'll study the daily, 4 hours, and so forth. And we cover these things in detail in the future chapters. Check the market cap. Go on Coin Market Cap. Look at the market cap of the coin. If the coin is under $1 million, you probably don't want to touch that because it's really easy to manipulate that coin. Very easy to manipulate that coin. You don't want to do that. You don't want to get into coins. I usually trade, I have a rule of thumb. I trade coins that are above 100 million. And there are plenty. There's like 67 or 80 or 70 coins that are above a billion or around a billion. So you can work with those. So you have to proceed with caution. You have to look at the daily volume, what's going on, how much money's coming in, how much money's going out. And that will do. A coin might be worth $1 billion, but if the daily volume isn't moving at all, you won't have much of a trade. You need movement. You need volatility, right? You need for it to go up and down for you to make money. Going up, you take longs, you make money. When it goes down, you take short and you make money. So, in a nutshell, just to sum it up, that's what trading is all about. It is about focus because there are a lot of people looking to, win that $10 that you just bet. There are a lot of people trying to take that away from you. And a lot of people that are more experienced than you are. A lot of people that have been trading for longer than you are. That does not mean that you cannot win. Yes, you can. But at the end of the day, in trading, what really counts, even after all the lessons and coaching that we can provide you, but what really counts is screen time. Your experience, you doing the trades, you learning by mistake, hopefully very few mistakes because you'll be learning from our mistakes. That's what we teach you in the whole course, what things not to do. But you will have, you're going to have a very small margin of error. There's going to be, times where you're going to probably hate yourself for making those trades. Why didn't you go through everything? Why didn't you go through the whole checklist? Because we get sloppy when we complete a couple trades, we make money, we think we're good, we get sloppy. That's where we go wrong. You have to understand, I keep saying this, you're trading against a machine, you're trading against algorithms, you're trading against bots, you're not trading against humans. So you need to try to take the emotional aspect out of it, right? And that's how successful traders make it. So with that, safe trading.